Hey grade 9s, today we're going to look at the worked memo of activity 10's general ledger. Now, the full memo itself or without the general ledger is already on here. For now, you're going to have a look at just the general ledger. So I'm not going to scroll back up and down. I'm going to refer to these balances that are up here, and then when we go and look for our figures, I will show you exactly where we get them from. Now, if we go down to our general ledger, the first thing that we need to start with is our balances. Now, in the balance sheet section, it's important to remember that we start off with balances. And in our nominal account section, we have totals, and we only ever use one side of the ledger. Okay, so to start off, you would have seen that next to trading stock, I've indicated that it's an asset. Now, assets increase on the debit side and decrease on the credit side. If we start by putting in our balance for trading stock, we would have January the 1st, our balance brought down, and they give us a balance of 16,000 Rand for trading stock, meaning we've got 16,000 Rand available on hand to sell. We then look at our debtors control. Now again, debtors control is an asset increasing on the debit side and decreasing on the credit side. The balance that they give us on January the 1st, balance brought down, is 7,230 rands. This figure indicates how much our debtors owe us at the beginning of the month. So on the 1st of January, collectively our debtors owe us 7,230 rand. We then go to bank. Again, it's an asset that increases on the debit side. They tell us, or they don't tell us rather, that it's a credit balance. So we treat it as if we've got money in the bank. On January the 1st, we've got our balance brought down, and we have 7,800 rand. The next one, cash float. Again, it's an asset increasing on the debit side, decreasing on the credit side. We've got currently 500 rand in our cash float, and this is our balance brought down on January the 1st. Right, that is our balance sheet section done and dusted. We then move to our nominal account section, where we have our sales total at 25,000 rand. Remember, sales being an income, and we start off with our total brought down on the 1st of January. We then have cost of sales, which is an expense, so we only use the debit side. And on the 1st of January, our total brought down is 20,000 rand. We then move to stationery, again an expense, so we only use the debit side. On January the 1st, our total brought down is 2,400 rand. We have packing material and wages, which are both expenses, which means we only use the debit side. So on January the 1st, we have our total brought down for packing material, and it is 700 rand. For wages, same story. On the 1st of January, we have our total brought down, and the total there for wages is 8,900 rand. We will also look at formulating the debtors list, but I will leave that for last. Now, if we go up to trading stock and we start there, trading stock is an asset that increases on the debit side and decreases on the credit side. Now, in order for trading stock to increase, we would need to purchase, more trading stock. Where would we purchase trading stock from? Our CPJ. If we go up to our CPJ and have a look, in yellow, you will see we do have a trading stock column, and we use the total of the trading stock column, which is 16,200 Rand. So 16,200 Rand is the amount of stock that we purchased further. Because we purchased it for cash and we now have it, our contra account we use as bank, and because the total of the trading stock column, or rather, because trading stock has its own column, we use the last day of January, which should be the 31st. Now, trading stock has increased. At the moment, as it stands, we've got a total of 32,200 Rand worth of stock. Now, we need to have a look at what stock we sold. Now, by selling stock, obviously trading stock then decreases. Now, we make two types of sales. Both of them come from the CRJ, our cash sales, as well as our DJ, our credit sales. Now, both of these have a cost of sales column, and we know that cost of sales is the contra account for trading stock when selling. So we can put in our detail, cost of sales. And the date for both of these would be January the 31st. Now, if we go to our cash receipts journal and we look at our cost of sales column, you will see that it does have its own column. And for cash, we sold 14,560 Rand worth of trading stock. So we can put in our 14,560 Rand here. If we go back up to our debtors journal, you'll see that we do have a cost of sales column again. So this is all our credit sales. And we sold a total of 3,680 Rand worth of stock on credit. So we can put in our 3,680. Now, you'll find that when we sell stock on credit, customers take the stock and pay us back later, which is why we recorded it in the DJ. Now we need to balance this account. If we have a look with the naked eye, which side do you think is bigger? We've got our balance and our stock purchased, and that gives us a total of 32,200. Or we can add the amount of stock we sold, which should only come to 18,000 Rand and some change. So what we need to do then is add up our debit side at 32,200. We then take it across. And now we need to subtract the amount of stock that we sold for cash and the amount of stock that we sold for credit. If you get your calculators out and you follow with me, you take 32,200, you subtract our cash sales of 14,560, and you subtract our credit sales of 3,680, which means we've got a total of 13,960 Rand worth of stock ready to sell next month. This is therefore then our balance carried down. And we would then need to start off the month of February with our balance brought down, indicating how much stock we have to sell, and that is 13,960 Rand. All right. We then move to the debtors control account. Again, it's an asset. It increases and it decreases. Now, in order for our asset to increase, people would need to owe us more money. The way in which people owe us more money is if we sell to them on credit. So, what we do is we go up to our debtors journal and we have a look in blue here at our sales column. Now, in our sales column, we have 4,600 Rand worth of credit sales, which means we can debit 4,600 Rand of credit sales. Where did we get that information from? We got it from the debtors journal. What have they done? Or why has it increased? Well, we've made credit sales. And this takes place on the last day of the month because sales has its own column in the debtors journal. Now, that is our asset increasing. When debtors pay us back, our asset decreases because they now owe us less money. So if we think about where we would receive these repayments, we would go up to our cash receipts journal, and in purple here, we would look at our debtors control column. This shows all the money paid back to us by our debtors for money that was owed to us. And throughout the month of January, we received 2,960 Rand from our debtors. So we credit the debtors control account with 2,960 Rand. We got that information from the cash receipts journal. Debtors control had its own column, so we can use the last day of the month. And what did they do? They paid us back, and that money was received in cash in our bank account. So our contra account there is bank. What we need to do there again is balance off the account. If again we look at the naked eye, our debit side is bigger. Okay, so what we need to do is add 7,230 Rand plus 4,600 to leave us with an outstanding amount of 11,830 Rand. We take that across. So assuming no one paid us back at the start of next month, our debtors would owe us 11,830 Rand. However, we now receive 2,960 Rand from them, which we need to subtract of the outstanding amount. So we take 11,830, we minus our 2,960, and that leaves us with an outstanding balance of 8,870 Rand. This is our balance carried down. And at the start of February, on the 1st, our balance brought down is 8,870 Rand. Meaning, at the start of February, our debtors collectively owe us 8,870 Rand. We then move to bank. Okay, again, it's an asset that increases on the debit side, decreases on the credit side. And I will use some color here. Bank doesn't change. Bank is still only affected by two things. We receive money, which we call our total receipts, which causes bank to increase. And this is from our CRJ. We also pay money. And this is what we call total payments, which includes all of our payments from our CPJ. Both of these have their own columns in the CRJ and the CPJ respectively. So we go up and we'll start with our total receipts. We have a total receipts of 21,160 rand. So we can put that in 21,160. We then have to go to our CPJ and look at our total payments, where we have 22,710 rand worth of payments. Okay, so we put in our 22,710, and now we need to balance the account. Sorry, I'm being a dodo. I've done it in the wrong account here, so if you just bear with me, on the 31st, we've got our total receipts from the CRJ, and that was 21,160. We then have on the 31st, our total payments from the CPJ of 22,710 rand. Sorry about that. Okay, now we need to balance out this account. We look at with our eyes and we see which side is bigger. If we add up our balance and our receipts, we should have 28,960 rand. Let's just make this a straight line, sorry. We then take that number across. Well, now assuming that we don't have any payments for the month, 28,960 rand would be our bank balance. However, we do have 22,710 rand worth of payments. So we take our 28,960 and we subtract our 22,710 to leave us with 6,250 rand in our bank account. Now, that is our balance carried down. And we need to close off this account and open it up for the next month. So on February the 1st, our balance brought down is 6,250 rand. That is what we have in our bank account at the start of February. Right, the last one that we look at in our balance sheet section is our cash float. And again, it's an asset that could potentially increase or decrease. Just scanning through our CRJ, there are no transactions regarding a cash float. However, we do have 100 rand for cash float on the 20th that appears in our sundry accounts. Now, it's in the CPJ, so we've withdrawn money from our own bank account to put in our cash float in our cash register. So there's a plus minus if we think about the accounting equation. Now, because we contributing, we are adding to the cash float, we debit our cash float. The contra account being bank on the 20th from the CPJ, and the amount was 100 rand. Okay. We don't use the credit side in this instance because they haven't given us any decreases of the cash float. And what we need to do then is total up, which leaves us with a running total of 600 rand contributed to the cash float. All right. We then move to sales, cost of sales, and stationery. Now, we started last term with credit sales. We now look at on the 31st, we make two types of sales. We make cash sales, so money comes into the bank, and that's in the CRJ. And we make credit sales, where we use the account debtors control. So that keeps track of how much money people owe us, and that's from the DJ. Now what we want to do is go to the sales columns of both of those in order to find out what amounts to put in. So if we look at the cash receipts journal in yellow, we have the total of the sales column at 18,200 Rand, and in our DJ we have our 4,600 Rand. So we head back down to our sales account, and next to our cash sales, we put in our 18,200 Rand worth of cash sales and our 4,600 Rand worth of credit sales. All we need to do is add this up to keep a running total. So we add 25,000 plus 18,200 plus 4,600, and that should leave us with 47,800 Rand for sales. Cost of sales, the contra account there is trading stock. Now remember, we sell stock for cash in the CRJ and we sell stock for credit in our DJ. So now we can either go up to our journals and have a look at the total of the cost of sales columns, which should be 14,560 Rand as well as 3,680 Rand. Alternatively, we should be going to our trading stock account to get the amounts, and we should use these totals respectively. So we've got our 14,560 Rand for cash, and we have 3,680 for credit. All we need to do now is to close off this account and total it. So we take our 20 grand plus 14,560 plus 3,680, which should leave us with a total of 38,240. That is the amount of stock that we sold up until this point in the year. We then move to our expenses. Now, all of these expenses can be found in the CPJ, and all of these expenses would have the contra account bank. The first one, being stationery, has its own column. We have an amount of 450. Because it has its own column, we use the last day of the month, and we add this to our total to make it 2,850 Rand. We then get to packing material, which does not have its own column. Okay, it's a sundry transaction that takes place on the 7th. Our contra account is bank. We have paid for this expense from the CPJ, and the amount of packing material was 560 Rand. What we need to do is total off this account, which should leave us with 1,260 Rand. And then finally wages, which does have its own column with an amount of 5,400 Rand. We pay those wages in the CPJ from our bank account, which is our contra account, and it does have its own column. What we need to do then is total up. So we have 2 zeros, 13. So we should have 14,300 Rand as our total for wages. Let me just write that neatly. 14,300. All right. So that is our ledger done and dusted, guys. If you just want to have a look up with me, our cash payments journal. So I used the total of the wages column for the wages account, the total of the stationery column for the stationery account, and then our 560 Rand for packing material in our packing material account. The last little bit is our debtors list. Now, a debtors list is basically to establish who our debtors are and how much they owe us. So if we have a look at our debtors ledgers, you'll see that we have 3 different debtors: F Hand, L Armstrong, and P Liggett. Okay, now you'll see that after every transaction we have a balance, and at the end of the month of January, F Hand owes us 2,850 Rand. L Armstrong owes us 2,600 Rand, and P Liggett owes us 3,420 Rand. Okay, this means that we can use those figures and those names to construct our debtors list. So, if we have a look, we've got our 3 debtors: F Hand, L Armstrong, and P Liggett. And now we need to fill in the amount that they each owe us, which is 2,850 Rand for Hand, sorry, let's make that look like a 0, 2,850 and 0 cents. We then have 2,600 for Armstrong, and we also have 3,420 for Liggett. So that is activity 10 done and dusted. Please make sure you mark and correct these and pay attention to where you might be making your errors. See if there's a common trend. All right, guys.